welcome all, whether you're tuning in after the fact on a different platform where you're here right now. Appreciate you guys for coming. As usual, it's your boy Hunter, the community manager over here at Optian Labs, aka Arbitrum. We have Peter Heyman over here, also working with business development over here as well. And of course, we're joined today by daMM Finance, or daMM, as you just heard. Joshua, how we doing?
Wonderful, wonderful. Glad to get a good start to the week. Yeah. How about yourselves?
Lovely, lovely. Just happy to wake up. That's all. Awesome.
Best way to start a Monday is to do an AMA with daMM Finance.
Thank you,
Literally.
thank you.
So before we actually do jump into the nitty gritty, if you don't mind, Joshua, can you maybe give us just a little explainer of what kind of daMM Finance is and a little bit about yourself in terms of your role there and how you kind of arrived at working at daMM Finance or kind of building it?
Yeah, absolutely. Just a little bit of background on myself. I helped start System 9, one of the larger altcoin market makers in crypto. And so, daMM is kind of the protocol that we wish existed. And kind of coincidentally at the perfect timing as well with the blow up of Celsius, BlockFi, Voyager. daMM addresses the problem that inevitably was going to happen with Celsius and Genesis and all these major institutional lenders, which is the lack of transparency. So it's daMM's an on-chain institutional lending platform, kind of like Maple Finance or Clearpool, if you're familiar with either of them. But Maple and Clearpool pretty much exclusively focus on USDC lending or ETH lending. daMM is for any token. Hence why we're launching on Arbitrum soon, as well as ETH mainnet, with the focus on listing and allowing institutions to borrow and lend as many tokens as possible. Yeah.
No, that's awesome. I mean, I think this is super critical for large scale adoption. I mean, like you said, we've seen this with Maple Finance, but being able to expand to more tokens, I think is really important there. And I think you alluded to this in the your previous answer, but how do you see what you guys are doing as opposed to the approach that let's say Compound and Aave took from a lending and borrowing perspective?
Yeah. So the issue with Compound, Aave, and even Euler, Cream, a lot of these over collateralized lending platforms is that they're so capital inefficient. Which, when you're a market maker, capital inefficiencies, kind of can kill your trades. You really do need the ability to borrow against your balance sheet with legal agreements. And so that's not something you can really do on chain without some form of a centralized credit risk entity. But what you can do is you can put all the information about the borrows on chain, as well as who's borrowing, what tokens are they borrowing, how long are they holding them, what exchanges are they moving them to, where are they yield farming them. And so that's kind of our primary focus. And kind of, I think that the issue with the over collateralized platforms outside of the capital inefficiency is just that they're, limited obviously by Oracle risks. And there's been a ton of smart contract exploits as a result, because, if you're going to accept altcoins as collateral generally, that's such a volatile asset and can lead to a lot of, Oracle manipulation to have hacks like what happened on Cream, for example. So there's a number of reasons market makers don't really use them at scale, and why they really do use things like Clearpool and Maple and TrueFi instead. So
No, that makes a ton of sense. I think you were also mentioning this too as well, but it's how does daMM bring transparency to lending from your perspective?
oh yeah, I think a good way to show how daMM brings transparency is to kind of compare it to the current existing institutional lenders. So let's look at Celsius, for example. Uh, if you are a lender to Celsius, you have absolutely no idea who they're lending to. You have no idea who your counterparty is, what trading firms you're lending to, what strategies they prioritize, and as a result, you get things like $1 billion in losses from lending to Anchor. A lot of really, a lot of lack of transparency per se, because you're just, I mean, even though everything is on chain, you don't know who they're lending to. They're not labeled addresses. No one's KYC'd, all that. So what daMM does is it allows you to, whenever you lend to a pool, like let's say you lend GMX on Arbitrum, you'll be able to actually see every single market maker's address labeled and KYC'd and KYB'd. In the case of businesses, you'll be able to see their address, how much they're borrowing, and the actual transactions and where they are moving funds to, what exchanges they're depositing to. Are they moving it to Binance? Are they moving it to OKX? How much? What quantities? Are they doing any kind of yield farming strategies or centralized to decentralized arbitrage strategies? You'll be able to see all those things. So yeah, that's really how we bring it. And also, not only that, you'll be able to see how much they're allowed to borrow, which is another pretty critical factor. Because a lot of these firms, some of them are more well known, some aren't, some are regulated, some aren't. So you'll want to see what's the risk level that the daMM Foundation and pool delegates we onboard are accepting for each borrower. So yeah.
Cool. Awesome. And I think one thing that kind of is I guess is kind of more of an obvious question for maybe even the people listening here is to what extent are people allowed to kind of borrow from daMM? Is it only institutional people? Is it people that are only KYC'd? Is it anyone just on chain that has a wallet? Would love to know more about that.
Yeah. So to start with, for our institutional lending, we're exclusively onboarding market makers, so no long short funds. And the specific reason for that is, the reason as well, kind of like the two primary factors for a lot of the institutional lenders blowing up recently was, Three Arrows plus, Luna Terra. And so Three Arrows, that could have been avoided pretty easily by focusing exclusively on market making firms. Because Three Arrows was openly a long hedge fund. I mean, they did not, advertise themselves as a market maker or a market neutral trading firm. And if you look, pretty much all the market neutral trading firms have gotten out of this, downturn pretty much scot-free because, generally speaking, they're completely delta neutral or hedged. So whether the market moves up or down, it doesn't affect them. Or if it does, it's, generally much, much more mild than, a long only hedge fund. So we're only onboarding institutional market makers that are market neutral. And we're using our partner, XMargin, I believe they now renamed to Credera, to get access to their exchange API keys so that we can actually see their net exposure to the market 24/7. So, we're provided minute-by-minute data about how long or short they are and can lower their borrow limits the more long or the more short they get. So that's how we're picking institutions. We do plan on opening up over-collateralized borrowing to anyone in the future, but that's something we're building out. That'll probably be Q1 next year. Yeah.
Yeah, it's definitely a very interesting topic because I feel like obviously in this world where everything is very mainly kind of quote unquote like kind of decentralized, anonymous, very crypto, I guess is the word really that kind of engulfs all that stuff. I think people tend to do maybe like kind of like look down upon anything that has any type of centralization in it. Which I mean, if you ask me, I think decentralization is really just it's more of like a how do you call that? Like it's not like a black and white thing. It's a spectrum, right?
Exactly. Yeah.
So I'm very interested to kind of just maybe hear a little more about like your thoughts kind of on that and kind of rolling that out first. Because I mean, obviously you guys could have started doing it the opposite way, right? But I guess there's obviously a reason why you started with kind of let's do it institutional first, and then kind of from there roll it out to people over time.
Yeah, 100%. I think in crypto thus far, you've seen exactly like you said. Like there's been this black and white. You're an entirely centralized product, like a centralized exchange, or you're a completely decentralized product, like most DAOs or DEXs or whatnot. And there's really been a lack of products in the middle, or kind of that hybrid centralized decentralized model where maybe portions are centralized and portions are decentralized, and that's really what we're going after. So our goal is by the end of next year to completely have everything but the credit risk portion of the protocol decentralized. So all utilization rate management, just like Aave and Compound, But except for the under collateralized lending, that being completely managed by a centralized credit risk entity. But everything else on the protocol we do want completely decentralized. And I think you're going to see a lot of protocols that are that hybrid centralized decentralized model coming out in the next few years. We've been speaking to quite a few, and I think there's a really there's a ton of market opportunity there that has kind of been left out over the last few years.
100%. It's definitely, the direction of the space is changing, and I think changing for the better, where we're going to see more capital inflows come into the system. But with that being said, like how does daMM discriminate against short selling from your perspective?
Yeah, that's a great question because like a lot of token issuers are onboarding with us, and that's kind of the thing they're worried about. And like we kind of give them two answers that are kind of contradictory. Number one is short selling's a natural part of every healthy market. It's been in equities forever, and I think the saying that a lot of bankers use is like short selling's never killed a company. Might have just hurt the stock price in the short term, but it's never a long term thing. And the second thing we say is, the way we actually do discriminate against that, and whether a market maker was going completely long or short, we would discriminate against that. And the way we do it's through our credit risk partner, X Margin. We are able to see every borrower we onboard's live positions on it. They provide X Margin their API keys for exchange accounts, and we can see, are they long? Have they bought a bunch of spot Bitcoin and Ethereum, and are they super long the market? Like a Three Arrows, or are they really short the market right now? Do they expect prices to go down? And we actually lower their limits, whether they go long or short, minute by minute. As we are fed new data. So that's really how we, treat our borrowers. And the more market neutral, the more delta neutral our market makers are. The larger the borrow limits they get versus their balance sheet. So yeah.
That's great. And like maybe one other thing is, daMM can be this, or at least from what I see, it can be this like critical infrastructure that's useful in the Arbitrum ecosystem as we've gone and expanded our DeFi ecosystem, where now after Nitro we may have almost every major DeFi team that's building on top of Arbitrum today. So how do you see daMM integrating, within the ecosystem itself and providing value there?
Yeah, I think institutional lending. I actually expect there to be multiple platforms like us in the future that are doing institutional lending for any token. I think the industry is kind of moving towards that, just like it is in TradFi. I think the way we see ourselves being the best ecosystem partner possible is DeFi protocols, generally speaking, have a really hard time expanding to centralized audiences. There's kind of two ecosystems in crypto right now, I see. There's the centralized world and the decentralized world. Pretty much everybody who knows how to use MetaMask versus everybody who just sits on Binance. And so I think, by allowing these DeFi protocols to get exposure to centralized markets and, centralized exchanges, because we have a lot of exchanges that plan on borrowing from us to list assets. That way they don't have to go buy the spot tokens. We actually really foresee a ton of protocols getting, exposure and users that they otherwise never would have. And I think that's a really big positive for DeFi because it, opens up, to the, newer crypto people who are just onboarding decentralized exchanges and lets them see, hey, wow, there's this really cool project that I'd never heard of. And now I can actually learn how to use it and go on board with them and make a wallet, interact, deposit, all that. Yeah.
I think what would be really interesting, especially for a lot of people already in the ecosystem, is not only obviously being able to kind of being able to lend and borrow. I mean, using like these like some of the classic Arbitrum tokens, right? Like like the DPXs, the GMXs, the Magics of the world, but also even like for example, I think there's this product called GLP from GMX, and in essence, people are able to kind of get their own kind of like ETH yield from that, from like holding GLP, essentially. Kind of like the whole. I think it's kind of like part of like this hashtag real yield movement that's going on Arbitrum right now, where it's like instead of kind of inflating with these kind of random tokens, you're getting just ETH yield. What are your thoughts on that? I mean, I think like an integration like that would be like so interesting.
Oh, I think that you're 100% right. I think a lot of the reason we aren't doing liquidity mining for that exact reason. We have a new model that's, it's if you want to check out more information on liquidity bonding, it's in our docs on our website. I'd recommend checking it out if you guys are interested. But exactly right. I don't think liquidity mining in general is going to survive much longer because if you just look at the economics of it, I mean, your cost of acquisition for a user is just so high. I mean, you're basically just minting equity to give to users. And so I see that, that fake yield kind of going away and moving more towards like the only products that are going to survive in crypto going forward are going to be the ones that are actually providing, net economic value. So, lending and borrowing protocols, exchanges, options trading vaults, things that are, strategies like Yearn and GMX. Like you have to have a real product. You can't just be minting tokens and, dumping them on users' heads. There has to be an underlying core, decentralized or centralized business that's, the token is controlling in some capacity. So I definitely see that real yield 100% is going to be the future of crypto. So yeah.
There we go. We are all pioneering it together over here on Arbitrum. You guys included.
100%.
So I think we'd love to know a little bit more also just about your roadmap generally. Like kind of when people can kind of maybe expect to see daMM Finance on Arbitrum maybe, or just any other plans you guys are have in mind. Absolutely,
yeah. So we're really close to launching on mainnet and on Arbitrum, likely in the next few weeks. Expect a date from us in the next couple weeks. We're really excited. Been a lot of work on our side, onboarding tokens and everything like that. Incredibly excited to come to Arbitrum. We've gotten a lot of interest already from a number of protocols that are on Arbitrum about lending directly. So quite excited about that, and hope everybody comes and deposits on daMM then. We plan on launching daMM, the core product, the institutional lending platform, in the next couple weeks, as I mentioned. We have a new product as well that I think is more, token issuer focused called raMM. That's a, decentralized. It's actually a properly, completely decentralized request a market maker platform. So, really bringing transparency to the dedicated market maker business. Guys like the businesses of people like Wintermute, GSR, Alameda, really putting all of that on chain for token issuers to get, bids on their market making deals. And so that's probably going to be coming out likely towards, probably November, December. So yeah, a lot of stuff coming out this year.
That's awesome. I know that market makers are definitely playing a larger role in the Arbitrum ecosystem. Like I saw this with Hashflow, but there's definitely others that are that are participating. So that's great to hear from your end.
I mean, and it's really nice too because I think daMM and raMM, they kind of both solve this problem of a lot of Arbitrum, and you could even say most chains in crypto that just aren't ETH mainnet, a lot of times what happens is their tokens will get a ton of centralized exchange trading, but typically the DEX volume will lack in relation. And a lot of times I think that has to do with the fact that the market makers can't, it's either hard for them or they aren't familiar enough with the chain generally to go, move tokens onto DEXs on that platform without doing their own smart contract audits and everything like that. So I think, daMM and raMM are going to bring a ton of positive externalities in bringing market makers to on-chain trading of, different blockchains. So I think that's going to be another, big net positive as well.
Awesome. Yeah. And I think, by the way, this may be a good time to maybe move on to some questions that anyone in the crowd may have. I know we're operating on like a 30-minute time schedule here, so I want to be cognizant of that. Anyone in the crowd, feel free to raise your hand. We'll bring you up and you can ask us a question, whether it be a daMM Finance or us. But before I even do that, I do want to ask you my own selfish question. I apologize. So one thing that I'm sure you noticed with crypto that's been very hot recently, obviously, are NFTs. Do you guys have any type of integration planned for maybe the ability to maybe lend or borrow NFTs, both obviously from an institutional perspective and the basic one?
That's a really interesting question because, putting my market making hat on, Something that we were even looking at about 6 months ago, 9 months ago, was market making NFTs, and I think there is definitely a market there because if you look at how like OpenSea and a lot of different you know um, NFT marketplaces trade, they're very similar in the way altcoins trade. It's actually it's very odd. They trade very similarly. Like the floor generally is the spread. I think it's a very very interesting opportunity, and I think yeah, we've definitely kind of chatted about that internally, and I definitely expect there's something to be something like that coming soon. Yeah, I don't know how soon, but just because it is a bit of a tech build to convert everything from ERC20s to ERC 721s or the respective NFT platform or different standards on different blockchains. But institutional NFT borrowing, I definitely expect to be a thing. Yeah.
Awesome. Yeah, no, I mean, I think that's, definitely one thing that, right now I feel like hasn't obviously caught on quite yet because I feel like there isn't really anyone who's either done it or even, I mean, I'm not even aware of anyone who's done it, but if there is someone who's done it yet, I guess there's no demand for it yet. But I'm truly interested to see that kind of be the next, I want to say phase maybe of crypto. Like, yeah, you're familiar. We have different kind of phases throughout each year in crypto. And I think that'd be a really cool one just when we see people lending and borrowing their NFTs.
Because it is basically, if you ever post an NFT and you see like all those like bot bids, those are almost guaranteed to be an institutional market maker. I mean, very rarely are they like an individual trader, just given the size, especially on like the larger cap blue chip NFTs. So I completely believe that there will be institutional borrowing of NFTs. Yeah, there are market makers that have like 10 plus NFT deals where they're lent NFTs to market make. It's kind of becoming a smaller niche market of the altcoin market making space, and it's kind of a very very interesting like little subgenre of it, I guess.
DeFi's eating everything.
Yeah, for sure.
Uh, Definitely. So I think, as Hunter alluded to, this is the portion of the AMA where we can invite somebody from the crowd. It looks like we have one person here, which I invited to speak. But if anybody else would like to, feel free to raise your hand and we can invite you up here to ask any questions. Oh, see another request. Moen, I invited you up. Here you go.
All right, here we go.
Hey.
When Odyssey started?
Sorry?
Oh, I assume he's talking about the Odyssey. He's like, no, the Odyssey, correct?
Yeah.
Okay. Okay, 1 second. The Odyssey will begin soon once Nitro hits mainnet. Nothing related to daMM Finance, unfortunately, Joshua. But
No worries.
In a way, though, it will bring more users to Arbitrum, making it easier for them to onboard themselves into daMM Finance as well. So, still relevant, still very relevant. But yes, Moen, it's going to be after Nitro launches, and any updates on that will be in the announcements channel.
Anytime, like 1 month, 1 week.
Unfortunately, not, my friend. Too much alpha. Way too much alpha for an AMA. I've already spilled enough beans, but definitely stay tuned to the announcements channel.
Okay, thanks.
Thank you for coming on, my friend.
Cool. I also invited Joseph Justice. It's another guy, Joy DX.
Yeah, guys. Hello, everyone. Greetings from Kenya, man. I wanted to know when exactly is Nitro starting then? When is it shipping?
Yes. Yeah, no, Nitro. So similar question to what I answered with the Moen. It'll be, so currently the testnet merge for Incubi already happened. So you can test your apps already on some of the testnets that we already have open, but the actual mainnet is still TBD. We have not announced it yet. Just know it's coming soon.
All right. Thanks, guys.
Thank you.
Cool. And looks like Joy DX is also here.
Hello. Hello.
Hey.
Hey,
Greetings.
I want to know actually, Arbitrum have governance token when they launch.
There's no token, my friend. No
Yeah, no
token.
token.
So there is no plan.
There is no token. That's all we can say, unfortunately. Or I plead the fifth. Isn't that what they say over here in the States, Peter?
Yeah.
Yeah.
Okay.
Yeah, plead the fifth
Forgot
on
to plead
that
the
one.
fifth. But yes, no, there's no token. I'm going to disconnect you just in case you start asking more complicated questions. I'm sorry.
Yeah, good call on that one.
Okay, well, for what it's worth, let me just check the AMA chat real quick. Someone said, "Better not hear, better not hear another Odyssey question."
Yeah.
Um,
Thanks, Bagel.
I guess we have one question in the crowd here by Castle. I guess and this is definitely more for you guys. What is your, I guess, current stance on the any audits on the system?
Oh yeah. So sorry.
Yeah, you're good.
Oh, I didn't know if you were saying something else. Apologies. Yeah. So we have a security audit done. I think our official account posted the link to it in the AMA chat. It was done by daMM. We actually have another auditor as well that we're in the middle of having a second audit completed with. Yeah, so we built on a version of like every single daMM pool is a compound pool with a borrower framework built on top of it to restrict borrowing to exclusively whitelisted addresses that are KYC and approved by the foundation. And their borrow limits are also set by the foundation. All our code's open source. We're going to be publishing a bounty on it too soon for any bugs, anything anybody finds. Yeah, so we just given the nature of liquidity pools and how frequent security flaws are in them, we wanted to use only code that had been audited dozens of times in Compound and get our own audits done as well on any edits we make. Before we ever roll out anything, it's pretty much good industry standard just to have your code audited typically multiple times. So yeah.
That's awesome. I mean, for sure, that's one of the questions that we ask teams, as you know, before we do anything. So it's great to hear that you're taking security seriously, especially with audits. One other thing is I saw a question here from Bursting Bagel in AMA. He said, can you talk a little bit more about the daMM token and how it's interwoven into the platform?
Yeah, so just so everybody knows, we're not doing any liquidity mining, but we are doing liquidity bonding. So you'll be getting bonded daMM deposited. It's going to be starting to accrue immediately upon the launch of the platform. It won't be redeemable for daMM for at least another month or two after the launch. But the way the daMM token works is outside of governance for the major pools. I think like if you want a good analogy on the governance side. Aave and Compound managing interest rates, managing reserve rates, things like that. That's all included in the daMM token. But included as well is, direct protocol revenue sharing. So I think we're targeting 7.5 to 10% on launch of the protocol's revenue. So interest paid by market makers to the lending pools gets routed to staked daMM holders, kind of like Curve, or we're calling it a VDAM or internally, vote escrow DAM for governance. And so you'll be receiving straight up, 7.5, 10% of the protocol's revenue in stable coins directly. So, that's how the token's interwoven. It allows us to kind of move more towards a decentralized model over the, next year outside of the credit risk management. So yeah, that's kind of the high level of the token.
That's awesome. We love getting that alpha right at the very end of the AMA.
Yeah. Fee sharing turned on day one. Yeah.
It's awesome.
Cool. Cool. So I think maybe just to kind of end things off here, again, cognizant of the time, just for people in general in the audience who want to get involved with daMM Finance, maybe want to just, either contribute or just be part of the community and, be aware when there are new updates, where can they go to do that?
Yeah, absolutely. Check out daMM.finance. That's our website. We have our Discord link at the top there on the community tab. It goes direct to our Discord. Feel free to chat with us there. Our team's there, and we're taking we answer questions publicly. So more than happy to answer any more anybody has. I would say that's probably the main place, and then we'll be launching the app on daMM.finance likely the next couple of weeks. So very excited to have everybody on and have Arbitrum on. Very excited.
Great,
So
yeah,
time,
and
guys.
thank you for coming on. Really
Yeah,
appreciate it,
thanks for being here.
Of course.
Yeah.
Thanks so much, everybody, for listening in.
Yeah, thanks for everyone for tuning in. If you joined late, we'll also try to make sure to update this on YouTube later on this week, so you can just listen to the playback. With that being said, thank you guys for coming on today, Peter, Josh. We'll see you guys later.
Y'all have a great one. Bye-bye.
Have a good one.